In this presentation, we will continue on with our comprehensive problem related to a public university, recording the transaction, the data on the left-hand side, recording that transactions into the right-hand side. In prior presentations, we have recorded the transactions for a time period into the general journal, then posting them to our trial balance worksheet. Now we're going to take this information and do the closing entries. The closing entries will be closing out the temporary accounts down below, closing them out to what would be in a for-profit organization, the equity section. In this case, we're closing them out to the net position section. To do this, we're going to start a new type of worksheet. So you'll note here that we have the beginning balance. We recorded the transactions here in the adjustments, and then we have the ending balances. Now we're going to start a new worksheet so that we can use these ending balances and then record the adjusting entries so that we can see just those adjusting entries and not have all this other data kind of muddying up the works. Also, so that we can have one trial balance that's kind of our adjusted trial balance, the main one that we will be used to making the financial statements, and another that will help us to calculate the closing entry, which will help us to break out between the net position accounts as we go through. So the process we're going to do is we're going to go down to the trial balance below down here. This trial balance, you'll note, has been constructed from the trial balance up above. So these beginning numbers, in other words, are from the ending numbers from the trial balance up above. So these ending numbers then are the beginning numbers down here. Then we're going to have these beginning numbers and then a nice clean adjusting entry worksheet that we can then record our closing entries to, resulting in the ending trial balance, that then being a trial balance that will be a post-closing trial balance, one that will not have temporary accounts in them. All temporary accounts closed out to, in this case, the net position accounts, and that's going to be our process. So just like in a for-profit organization, we're going to take these temporary accounts down below. We want to close them out into the net position section. It would be the equity section in a for-profit, net position section here. In a for-profit organization, you'll note that we typically do this in kind of like maybe a four-step process you might be familiar with. Closing out revenue first to something called an income summary account, a clearing account, then closing out expenses to that clearing account, income summary, then closing out income summary to the proper closing account, either a capital account for sole proprietorship or retained earnings for a corporation, then closing out either dividends or draws to the capital account or retained earnings, depending on if it's a corporation or sole proprietorship or partnership. And you could do that in one closing entry as well and group them all together. We are actually going to kind of group them together in one journal entry in terms of revenue and expenses, but and then break them out in terms of the breakout between the net position accounts up top. So we're going to go through the closing entry, and we're basically going to do it kind of a one-step process. First of all, closing out pretty much all of the transactions that we have down below. We're going to close out pretty much all of these in one, revenue and expenses. Then we have to consider those concept of the net position that's related to the capital investments, the restrictions, and the unrestricted. We'll actually then adjust these accounts for those classifications after the first initial closing entry. So we'll have the initial closing entry, which will be going to the unrestricted net position with one long transaction closing out the temporary accounts. And then we'll basically go back through and break out the amount that needs to be adjusted for the restricted amount and the net investment in capital assets. All right, so our objective is that all these accounts down below need to be going to zero. Whatever is in them, we need to do the opposite thing to them in order to bring them down to zero. So we're, in essence, just going to take all these accounts and do the opposite thing to them, bringing them down to zero. Let's do that now. We're going to scroll back up top, and we're going to call this number 12. I'm going to say this is number 12. That's what told us to do the closing entries. We're going to pick up the revenue account, and we'll just do this one by one. You could kind of autofill this and do it much faster, but we're going to want to see what we're doing here. This is a credit balance. We're going to make it a debit to make it go down to zero. So we're not going to make it a debit. We're going to debit it to make it go down to zero. So I'm going to say negative in L34 of that number. Now, that's going to take the number and flip the sign. Remember, do not take this number, because then you'll create a circle reference when you post to this cell. You want to take this number, then we'll post to this cell, making this cell go down to zero. So we will say enter. So we have that. And then the next one, we're just going to go straight down the line here. We're going to say tuition and fees, discount, and allowances. I'm not going to put the debits and credits in order in this case. I'm going to go in order with what makes the most sense, just going from top to bottom in terms of the trial balance. This is a contra revenue account, so it's right up top. It's got a debit balance. We need to make it go down, therefore we're going to credit it. So we're going to be in cell M35. Within M35, I'm going to say negative of that number, the 245,000, and enter. And then we're just going to go straight down the line here. The next one is going to be the revenue state appropriations, and it has a credit balance. We're going to go ahead and debit it to make it go down. So we're in L36. I'm going to say negative of the revenue state appropriations and enter. And then we're just going to keep rolling down here. We're going to say the next one is going to be the revenue for the gifts and grants. It has a credit balance, therefore we need to debit it. So in L37, we're going to say negative of the revenue related to the gifts and grants and enter. Next, we're going to pick up the next account, of course, which will be the revenue for the investment income. It has a credit balance. We need to do the opposite thing to it, which is a debit. So we will be in cell L38. I'm going to flip the sign by saying negative of that 9,000 and enter. And then the next account we're going to have is going to say equals, and we'll scroll back down to the revenue changes in fair value of investments. So that's a credit. So we need to debit it. We are in L39. We're going to say negative of that 14,000 and enter. And then continuing down the line, even though we are now in the expenses, we have the expenses for the general, enter. Now that is a debit balance, therefore we're going to do the opposite thing to it, a credit in cell M40. So within cell M40, I'm going to say negative of that number and enter. Next, we have the expenses for the research. So we're going to pick up the expenses for the research, and that's going to be a debit over here. So we're going to credit it to make it go to 0. So I'm going to say negative of, scrolling back down to that 27,000 and enter. And then I'm going to say, next one, we're going to say just right down the line is going to be interest. So we have interest. We're going to be on the credit side. We're going to pick up that 51,000. It's a debit, so we're going to credit it. So we're going to say negative of, scrolling back down to that 51,000 and enter. And then next, we're going to say what's under the interest expense. We then have the depreciation. So we're going to be on the credit side, M43, negative of, and we're going to pick up that 65,000 and enter. And we're going to keep rolling down. We're almost there. We're almost there. It's getting close. We're getting very close. This is the last one. So enter. It's a debit balance, so we're going to credit it. So we are in cell M44. I'm going to say negative of, scrolling back down to that 3,000, picking up that 3,000 and enter. Okay, so now the difference of all this is going to go into the net position. We're going to put it first into the net position unrestricted, then go back in and adjust for the restrictions related to capital assets and just restricted. So we can see here that we need a credit because the debits now add up to 5,322,900. The credits add up to 3,636,000, and therefore we need another credit. We're going to be in the credit side. We're going to use our trusty plug formula, that being the negative sum. So we're going to say negative SUM brackets, and then we're going to select these accounts. There's our plug. We're going to call that net position. So this is going to be equal to the net position unrestricted. Net position unrestricted. Now let's go through and post this out. So we've got the revenue and tuition first. Just going to scroll down, look for the revenue and tuition fees. That's going to be in cell Q49. So we're going to say equals, scroll back up to that 1,379,000 and enter. Then we have the tuition fees discount allowances. So we've got that down below. Tuition fees discount allowances. That's in cell Q50. Within Q50, we're going to say equals, scroll back up to that 245,000 and enter. The next one we have is the revenue state appropriations. And so we're going to say this one is in Q51 equals, scrolling back up to that 3,065,000. Notice all these are going down to 0. That's the objective. That's what we're trying to do here. And then we have the revenue. Let's see, revenue for the gifts and grants. So that's going to be revenue for gifts and grants. That's in cell Q52 equals, scrolling back up to the revenue for the gifts and grants and enter. And then of course we have the revenue for the investment income. Next one, revenue for investment income in cell Q53 equals the 9,900 and enter. It goes down to 0. And then we have the revenue for the changes in the fair value of the investment. Revenue for the changes in the fair value investment in Q54 equals, pointing to that 14,000. It then goes down to 0. Then we have the expense general. So expense generals down here in Q55, where we say equals, point to that 3,245,000 and enter. Then we've got the expense related to research, expense for the research. That's going to be down here in Q57, where we will say equals, point to the 27,000 and enter. Then we have the expense related to interest. That's going to be down here in Q57. The last one was Q56, by the way. It's Q57 equals the 57,000 and enter. And then we have the depreciation, which you're going to say is here in Q58, equals the depreciation of the 65,000 and enter, bringing it to 0. Finally, we have the provision equals the 3,000 and enter. These all go down to 0. We're out of balance by that last account, that being the net position, which we're going to put to net position unrestricted, that being in cell Q48. This similar to what would be the revenue account for a corporation or the capital account for a sole proprietor or partnership. So there we have that, increasing that amount. Okay, so that's done. Now, you could have done that a bit faster by using some autofills down here. I won't go through that now, but if you could have, you can do that a little bit quicker within Excel as well, but we want to point out all the transactions there. Next thing we want to do is now we need to do some reallocation. We posted everything to the unrestricted. Now we have to record some restrictions. One restriction is going to be related to the net investment in capital assets. Now, this is the beginning balance. We're not going to go back in and rework the beginning balance here. What we're going to do is make the changes that we made that would relate to the net position, net investment in capital assets. Therefore, if we go back up top, we're going to say, what changes did we make? Well, here's the capital assets. Those are the long-lived type of assets. Here's the changes that we had. We had the increase here. We purchased capital assets of the 542. It was for cash, so we have no related liability we have to deal with. And then we have the accumulated depreciation. The net of those two then is what we want to record as the change or in the net position, net investment in capital assets. So let's do that. We're going to scroll back down and we're going to call this 12. That's also going to be 12. And we're going to say that the unrestricted amount is going to go down. This is a credit balance. We're going to make it go down with a debit. So we're going to say this is going to be equal to the net position unrestricted, making it go down. And then below that, we're going to increase the restricted amount, which is the net position, net investment in capital assets. And this will be equal to this account. All right, and then the amount is going to be equal to the sum of, and we're just going to pick up the change, the activity. This is kind of like the GL account activity that we had for capital assets and accumulated depreciation. We increased the capital assets, we increased the accumulated depreciation, resulting in a decrease to the book value. The difference between those two being the 477,000. And then the credit is going to go to the net position, net investment, capital assets. So let's record this out. So that's going to, we'll record the net position unrestricted first. That's here. Something's in it. So we're going to say F2 plus F2 and then scroll over to that 477,000 and enter. So it's going down because it's a credit balance account. Okay, and then we're going to increase the capital assets account. So that's going to be here. We're going to say that this will be equal to the 477, increasing the capital assets. And kind of the idea there, note that when you think of the net position, represents the assets minus the liabilities. It represents the amount of money that you're thinking that might be spent. because I mean, if you're thinking about spending money, you're going to say, well, how much money, how much resources do we have? Many people will look at the net position kind of like as the bottom line of the resources available, and then try to think about how can I spend that money, right? And so what we want to record and show is that, hey, there's a substantial amount of this net position that's already been spent on capital assets. It represents capital assets. We're not going to be able to spend that money. So that's kind of part of the reason we want to represent that, break that out in the statement of net positions to make that clear. Okay, so then number 12, we're going to have one more, which we're going to be adjusting out of the net position unrestricted and put the restrictions on it, post it into the restriction. You'll recall we had a couple kind of transactions that had some restrictions. We're going to have to go back in and pick those up. But the journal entry, we know, is going to be decreasing the unrestricted. This is a credit balance account. To make it go down, we do the opposite thing to it, which is a debit. So we're going to debit the net position unrestricted, and then we're going to put it into the net position restricted. We'll put it into the net position restricted. So that's going to be our transaction. Now we got to go back and kind of figure out which accounts we need to pick up, which numbers are going to be restricted. For that, we're going to go back to the data. So if we go back to the data up top, I'm going to ungreen this one, and let's go through the data. And I think in number 6 we had this amount here. You'll recall cash contributions from alumni, amount that needs to be used for construction project. Well, that's a restriction. We didn't record the restriction by account, which is going to basically mark that and say, that needs to be dealt with now in the closing process. And then I believe down here, let's say number 11, we had income earned on investment that was restricted. So once again, we didn't record that by account when we recorded the transactions during the time period. However, now in the closing entry, we will make that adjustment. All right, so those are going to be the two. I think those are the only two. So we're going to scroll back down, and we're going to pick those up. We're going to then say this is going to be equal to, scrolling up top, we're going to pick up that 100,000, and we will add to it that 5,300, and that's the 105,300. That's the debit and then the credit. So there we have the debit and the credit. Let's do that and reclassify the restrictions. So we have net position unrestricted. So here's the net position unrestricted. It's in cell Q48 where we make the adjustment. Something is in there. So therefore, we're going to say F2 plus F2. Scroll over to that 105,300 and enter. Then we have the net position restricted. That's going to be up top. We are in cell Q47. Something is in it. So I'm going to say equals, and we're going to go to the net position restricted and enter, increasing that amount. So there's going to be our adjustment, our breakout of the net position. We have our post-closing trial balance now, the post-closing trial balance showing assets, liabilities, and then what would be the equity section here being the net position section, not showing any temporary accounts, those being if it was a for-profit organization, the income statement account here being the statement of activity. Same kind of concept. They have been closed out. You'll see, of course, that the assets minus the liabilities add up to $3,305,900, which is equivalent to the equity section that has now been closed out, $3,305,900, which of course is the same as all the equity accounts before, beginning balances plus the activity that we're going to close, the income statement or statement of activities, that adding up to $3,305,900. Next time, we're going to take a look at a financial statement, that being the statement of net position.